Hello everyone, welcome to the series of candlestick pattern. So today we are going to look into the bullish engulfing pattern. The disclaimer for this video is this content is for educational and information purpose only. So bullish engulfing pattern is one of the candlestick pattern, and this pattern mostly occurs at the key reversal signal in the technical analysis. So whenever the market is in the downward direction, so if the market is going to change its direction to the upward side, this is the particular pattern gives some idea about the market reversal signal. So introduction to this particular pattern. Bullish engulfing is a candlestick reversal pattern, and this pattern appears at the end of the downturn. So this is the picture for the example purpose. Signals a potential upside reversal and used in stocks, forex and options. So what is a bullish engulfing pattern? So it's a two candle pattern. So for the example purpose, if you want to see, so in this particular chart you will see these two candles, like a red candle and after that the green candle. So this is the pattern. The previous candle is engulfed by this current particular candlestick. A two candle pattern. First candle bearish, so this is the red candle which it is showing, it's a bearish, and the second candle is the bullish one. Second candle engulfs the first, so here if you see, the red candle is engulfed by this green candle. So it's open, it's covered in whole body actually. From opening of this candle is open lower and close higher. So it's a two candle pattern. Structure of the pattern. A small bearish candle. So in this picture, if you see this particular, when the stock direction is downward, so this pattern appears at the end of the downturn. So if you see this particular red candle, this is the day one small bearish candle. On day two large bullish candle, so this is the green one. So this green candle is appear after this red candle. So this red candle is engulfed by the second green candle. Opens lower, close higher. So if you see this particular candle, it open at the lower, it open lowers and close higher of the previous day candle. So this is the whole chart, but this is in the for the magnifying purpose, just cut from this particular chart. Strong buying pressure. So yeah, so if you on this particular for the confirmation purpose, the second thing we should see, the volume on this first day will be lower than the second day. So basically the green candle will have the more volume than the previous day. So that is the second confirmation. So this is the structure of the pattern. So let's key characteristics of this one. Occurs after a downtrend. So this is the downtrend, continuous downtrend going on, and at the down when that particular individual stock is about to reverse its direction, it appears at the bottom. So large second candle, which is this one green one, engulfs a real body of the first one previous candle, and volume confirmation. So if you see here, the red candle volume here, this is the one, and the green candle volume is here. So the green candle volume is greater than the red candle, and also the current day candle is engulfed the previous day candle. So these are the two confirmations. So along this one you can use another indicators whichever you thing suitable for, but these are the two things you should basically look for. So we will look into the real life example also, but prior to that, I think so you understand the basics of this one. That this is a two candle uh, two candle pattern appears at the downturn, and we have to look for the candle. This candle, the subsequent candle should engulf the previous candle along with the increased volume. Psychology: seller dominate initially, and here the buyer is taking control. So buyer, because of that, the volume is more. So here the sellers are giving up, and the buyers are taking control. Means they are, yes, the volume increase. That's the signal for this one. And momentum also shifts. Bull overpowers bear. How to trade? So after close or breakout, so if you here we already got now the confirmation about, we know that this candle is engulf, and also we check about the volume also more than the previous day. And then we have to see that one, if we have some type of confirmation. So like this, when the next subsequent day, if you see the opening price for the candle is above the closing of the earlier day, so this is one of the, so this will going to be a support for the next day. And if the price is not going below this particular support line, which is the closing around the, like the high of the closing price, then that's one of the signal which the user the trader should enter into that position after close or breakouts of this one. And if the, in some cases it's like a false signal, so in that case you have to use the stop loss. This is the below low. So if the price opens below this particular closing price, then you should get out of that one. Or the second, if you want to stay in the trade, at most this lowest price of the engulf candle, that should be your stop loss. In that case, this particular pattern will going to be invalidated, and the downtrend may continue. So target is resistance. Target is, this is the one, resistance for the engulf pattern, so which will going to be support for the subsequent one. So if the support breaks, then you should get out of that position, because that will going to be invalidate this particular pattern. Confirmation indicator, the same thing. Support level, you can use the moving average also. The moving average or the MACD, anything is fine. So here we use the MACD. So MACD, here the engulfing pattern is confirmed. The next price opens above that one, and the MACD cross above. So this is the second confirmation. Even we check for the volume also. So engulfing pattern is not the one we should look for, but along with that one we have to see the other indicators also for the confirmation purpose. So here we look the MACD, volume, and the next day price open above the high of the engulfing pattern. So around like a 3 confirmation, and the price stays above this particular support level. So advantage, easy to identify, it's a strong signal and works on all time frame, whether it's a 5 minutes, 10 minutes, 15 minutes, half an hour, 1 hour, or day. Mostly it's on the day, it's better to use. Longer time frame, it's easy. Limitation for this one, the false signal in sideways market. So if you see here, this particular candle engulfs the body. Actually we don't have to look for the wick. So the body is engulfed by this particular candlestick, and even second day the price close above this particular, even like open is near to the closing, and close above, but the MACD is not cross. So here we don't have the confirmations. So need the confirmation to enter into the position. Don't go in, so only on this standalone on this particular pattern only, it's really riskier. Tips for this one: trade near support here. So once you have the confirmation, now the price is open, even second day it touch here and bounce back. Third day, so here like after like price is not going below, so here you can trade near this particular support. Use confluence, avoid low volume. If the volume is low on the subsequent days or on the day of the engulfing cat pattern, don't get into these positions. Avoid to trade this particular this pattern. So wait for the confirmation. After you get the confirmation, multiple confirmations based on the indicators, then only enter into this position. Conclusion: powerful reversal signal used with confluence helps identify early buying opportunity. Yeah, and this is only for educational and information purpose only. Okay, this is not any financial advice. Thanks for watching the video, and let's see, we will get into the details of this one. So this is the chart actually. So here the on the chart we see the false signal where the MACD is going downward only, but here we got the pattern like engulfing. But whereas if we see here, we have the pattern, the previous candle is engulfed by this current pattern, even MACD is also cross. So this is something confirmation. Top of that we have to see the volume also along with it. Okay, so if we, for this particular day, Jan 5 2023, the volume is like if you see here is the volume, volume is around like 157.99 million, and on the next day it's at 220.91 million. So this is example for that one. So this is all about this particular engulfing pattern, bullish engulfing pattern. Thanks for watching video.